Now, there's a time when everyone was eager to jump on the Bitcoin bandwagon, and that's because Bitcoin is considered as a tool of financial inclusion. The world's best known and most popular cryptocurrency has nearly 180 million users worldwide. Now, contrast this with UPI. It has over 600 million users in India, in a household population of around 300 million. Now, what does this say? It says that on an average, there are nearly 2 users of UPI in each household. Now, according to NPCI, over 70 billion transactions are carried out on the UPI platform annually, and it is being extended to more than 30 countries worldwide. Also, UPI is developed and managed by the National Payments Corporation of India, or the NPCI, which is an Indian company. So it's not just make in India, it's make for the world. Interestingly, UPI costs absolutely nothing to the users. It can even deduct amounts which are as low as 1 rupee instantly from a bank account and credit it to another. Now, this revolutionary platform, growing at more than 100% compounded annualized growth rate over the last 5 years, has been hailed as a world leader in real-time payments by ACI World. And the beauty is, the rest of the world is forced to look to India to learn what the future looks like. Now, you can use UPI on more than 70 apps, with new ones being launched daily. However, 3 apps dominate the landscape with nearly 95% market share. Let's look at those 3 apps a bit more closely. First up is Phonepe. It's the largest one with nearly 50% market share. Number 2 is Gpay. It is the second largest with nearly 35% market share. Now, Paytm, which is the third largest with nearly 10% market share, is the third and last one. Looking at the big 3 in more details. Phonepe is owned by Flipkart, which in turn is owned by US-based Walmart. Gpay, also known as Google Pay, is owned by US-based Alphabet Inc. And Paytm, as we already know, is listed on the Indian stock exchanges. But do note that Warren Buffett-owned Berkshire Hathaway also holds shares in Paytm via its international holding company, BH International Holdings. But the point to note is, currently there is no direct revenue coming in from UPI payments. So should it still be considered as the next big idea? Now, let's understand this by taking a look at the business models of some of these apps. Let's take Gpay as an example. How does Gpay make money? Google Pay isn't making profits yet, primarily due to the fact that transactions from UPI and RuPay are free. However, it does generate revenues, A, via commission. When we recharge our phone, Gpay earns commissions from telecom operators. When we make bill payments for DTH, insurance, electricity, etc., they earn commissions. For every payment that we make through the app, Gpay gets a commission from the service provider. And B, via its vast user base. UPI also lets users pay to another Gpay user through their registered phone number. Google Pay doesn't earn anything through this, but it does give the company access to user data to work on their product further. Now, these examples show that a free platform can still generate a lot of revenues. Plus, the user data part cannot be ignored either. With billions of transactions worth over $1 trillion annually, it would be a world of fantasies for an artificial intelligence entity. Now, the monetization from this large source of finance transactions data cannot be imagined today, but could add value to the users in the form of highly customized offers on products and services. And then there is monetization via promotions, even if it is negligible compared to their core revenue streams. Also consider comparing them to other platforms which also generate no direct revenue from subscription fees, but have a huge user base in India. For example, all your Google search engine, your YouTube, Facebook, Instagram, etc., all of these have a large number of users, but they use these platforms for free. What do these examples say? Now, they show that a free platform can still generate a lot of revenues. And according to Omniscience, this is a latent growth vector which is yet to be significantly monetized. In other words, a high-risk, high-return venture capital-like investment. The next thing to understand is how can you make the most of this UPI wave? Vikas Gupta of Omniscience says that taking exposure to UPI seems to be more weighted towards US stocks due to the 85% share of Phonepe and Gpay. Gupta's advice to those who prefer investing in Indian stocks is to look at the small case on fintech and digital payments and banking, which provides exposure to the broader digital payment space, including channels such as RTGS, NEFT, IMPS, etc., besides the apps. This basket consists of Indian private banks, PSU banks, other financial services and technology stocks as well. Well, for more such updates and videos, stay tuned to Money Control and don't forget to like, share and subscribe.